In 1602, a merchant bought a piece of paper. It wasn't a contract, a bond, or a deed. It was something that didn't exist before, and it changed capitalism forever. For centuries, historians told us that joint stock companies emerged as a practical solution. Merchants needed capital for long voyages. Banks couldn't fund them alone, so they pooled resources, divided risk, and created the corporation. Clean story, logical progression, almost entirely backwards. The Dutch East India Company, the VOC in Dutch, didn't invent the stock market because they needed money. They invented financial instruments because they needed to shield power from accountability. Understanding how requires stepping back into the political machinery of late 1500s Amsterdam. The Dutch Republic had just broken free from Spanish rule. It was fragile, decentralized, and drowning in debt from wars. Powerful merchant families, the De Witts, the Tripps, the Bickers, controlled the government. They'd funded expeditions to Asia. Those expeditions made enormous returns, but here's the problem they faced: wealth that visible creates enemies. If a merchant family held direct ownership of an Asian trade route, the government could tax it, seize it, or redistribute it under pressure from rivals or the mob. But if ownership was fragmented across thousands of small shareholders, ordinary merchants, widows, clergymen, the wealth became diffuse, invisible, untouchable. The VOC's charter in 1602 didn't emerge from market demand. It emerged from a political negotiation. The States General granted a monopoly on all Dutch trade east of the Cape of Good Hope. In return, the VOC would be structured as a corporation with publicly traded shares. This wasn't capitalism discovering itself. It was power designing a firewall. Here's where the system gets clever. The VOC issued shares, transferable ownership slips, to raise capital. Investors bought them expecting dividends from spice and silk sales. But the genius wasn't the share itself. It was limited liability. A shareholder's losses were capped at their investment. Their personal wealth was shielded. This sounds routine now. It was revolutionary then. Under earlier trading models, if a voyage failed, investors faced unlimited claims against their estates. Creditors could seize their homes, their ships, everything. Limited liability meant you could invest without risking ruin. Suddenly, capital flowed from people who'd never sailed, never seen a spice plant, never taken a risk at sea. But here's the feedback loop that historians missed. The VOC leadership, the directors, the governors, they also held shares. They could trade them. They could accumulate them. Over time, a small group of families consolidated control while appearing to answer to shareholders. They'd created the perfect instrument, democratic in form, oligarchic in function. The VOC also pioneered another instrument, the bond. When the company needed short-term cash between voyages, instead of approaching individual creditors, they issued debt securities. Investors lent money, received a fixed return, and could sell the bond to someone else. The company's liability became tradable, abstracted, and dispersed across a market. This mattered because it meant the VOC could operate with borrowed money that never appeared as personal debt to its rulers. The company owed money to faceless bondholders. The rulers owed nothing personally. Risk was socialized. Profit was privatized. The architecture was built. Now the real story. The VOC became the most profitable corporation in human history. For 200 years, it paid dividends that dwarfed any other investment. That success wasn't because it was efficient or innovative in trade. It was because the financial structure allowed directors to extract value with impunity. The VOC's annual reports, published, audited, celebrated, showed steady profits. What they didn't show was the violence, the monopolies enforced by military force, the slavery, the destruction of competing traders, the extraction of wealth from colonies. All of it was legal. All of it was hidden inside the corporate structure. Shareholders in Amsterdam sipped coffee and collected dividends. They didn't own plantations or command fleets. The corporation did. The corporation bore no moral liability. Its directors faced no personal consequences. The financial structure had achieved something remarkable. It divorced wealth from accountability. This is the system we inherited, not by accident, by design. The VOC proved something that every megacorporation since has copied. You can concentrate power, disperse liability, and claim democratic legitimacy simultaneously. Shareholders feel like owners. Directors feel like stewards. The structure shields both from consequence. The VOC eventually collapsed, not from moral failure, but from financial exhaustion. By the late 1700s, it couldn't compete with rival companies. Its monopoly eroded. Its debt exploded. The corporation that had seemed eternal dissolved. But the financial instruments survived. Joint stock companies, limited liability, tradable securities, corporate bonds, all of these weren't innovations born from efficiency. They were power structures engineered to concentrate wealth while distributing blame. The VOC didn't invent them because they were necessary. It invented them because they worked. Every modern corporation, from pharmaceutical giants to tech platforms to financial institutions, operates inside the VOC's architecture. Shareholders are protected, executives are shielded, liability is abstract, profit is concrete. The system works so well that we've stopped seeing it as a system at all. We see it as nature. But it's not nature, it's architecture. And architecture can be understood, dismantled, and rebuilt. Understanding how the Dutch East India Company engineered financial invisibility is the first step to recognizing how that same engineering operates today. This video is for educational and informational purposes only and is not financial advice. Always do your own research. Subscribe to track how the ultra-wealthy and corporations engineer the rules they play by. There's a new structural loophole uncovered every week. This video is for educational and informational purposes only and is not financial advice. Always do your own research.